Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, it is a surprise to nobody, at least if you're paying attention, that the Federal Reserve recently dropped interest rates. Remember, they control short-term rates. They dropped rates 50 basis points or half of 1%. Well, that's good news and bad news. Good news if you are looking for lower rates overall, because the markets actually tend to follow what the Fed does, that is the overall interest rates in the market in general. So that's the good news. The bad news is if you have money in money markets or savings accounts, likely your rates will go down if they have not already. So today we're going to talk about what happens to the stock market historically when the Fed drops interest rates when the stocks are near all-time highs. That was a mouthful. But I'll jump in and explore what happens when the Fed cuts rates. What's next for stocks? Now, I want to mention our team, Destiny Wealth Partners, that's our registered investment advisory team, just won the 2024 Investment News Awards RIA Team of the Year. Big accomplishment for our team. So I just want to acknowledge all the hardworking folks on our team. Congratulations. This is actually was just recently awarded to us a few months ago, so I want to let everyone know. So let's get back to the topic. So what happens to the market when the Fed cuts rates, when stocks are near all-time highs? As you know, the equity markets have been on a tear over the last year and a half or so, and we're seeing all-time highs in the S&P, in the NASDAQ. NASDAQ's a little off, and of course the Dow. So here's the chart of the S&P historically. Things are looking good, but what happens? So let's look at some data. 20 times the Fed has cut rates when the S&P was within 2% of an all-time high. Again, we're in that range right now. And the S&P was higher a year later, all 20 times, with an average gain of 13.9%. So isn't this quite interesting? This is a study of history. So if the past equals the future, again, there's no guarantee, but there's a reasonable probability that history repeats itself, at least based on history. When the Fed drops rates, when the market is near an all-time high, odds favor we're going to have more upside. So that's really good news. What has happened in the past? Let's look at a historical chart. The Fed dropped rates when the market was near all-time highs in the early 80s, in the mid 80s, early to mid 90s, and obviously you could see in 2020s, this is what happened when the market was near all-time highs. The Fed dropped rates. We had, of course, the COVID scare. Then the market rebounded quickly, and here we are in 2024. So all good news, at least based on history. Now, I want to remind you, now, no matter what the market's doing, no matter what the Fed is doing, you have to have an investment discipline. You have to be consistent if you want to ultimately accomplish your goals. So I want to remind you, you need to have, number one, clarity on your goals. What are your goals? So if you don't know, I would sit down, write them down. Meaning, do you want to retire? If so, when? If you are retired, are you accomplishing the lifestyle you want in retirement? So again, clarity on your goals. That's number one. Another must-have, you must understand your risk tolerance on a scale of 1 to 10, with 1 being conservative and 10 being aggressive. Where are you on that risk scale? A lot of people don't know. They've never gone through a process to understand what their risk tolerance is. If you have $1 million in the stock market, if the market goes down 20%, you're going to lose about $200,000. Are you comfortable with that? What are you doing in terms of your bucketing approach? Meaning you have money earmarked for short, medium, and long term. So get clarity on what your risk tolerance and then how it applies to you. And the third thing here is your family index number. That is the rate of return that you need to earn to ultimately help you accomplish your goals. Again, 3 things: clarity on your goals, understanding your risk tolerance, and your family index number. All that to say is, if you would like a second opinion on your portfolio or financial situation, you can go on our website at nickelswealth.com. This is our website. Go ahead and click on the upper right-hand tab, this Request an Appointment tab, fill out the information, and one of our advisors will reach out to you and answer your questions and get you the information you need. As I shared earlier, the markets continue higher. Let's hope that continues. Thanks again for watching. Bye-bye.